All right, V2 Retail is a stock that we should look at as well, and it delivered a strong set of numbers. The stock price, of course, did not necessarily move because the stock has actually taken account of a pretty frenetic pace of growth over the last 8 quarters. And this is backed by steady volume growth, same-store sales growth, all of those metrics improving. But let's put that in context before we speak to the management. Mahima joining in to tell you about a bit of that. Mahima, what metrics are you most focused on? And would you say that the big challenge is to maintain this level of growth?
Absolutely. I mean, past 8 quarters, it's been growing over 50% in terms of top line. This is yet another quarter where they've done, over 86% of growth in terms of where top line stands. However, EBITDA margins have taken a hit sequentially if we take a look at that. Company is, of course, expecting their e-commerce initiative by the next financial year. So that's something interesting, and I would want to know from the management as to what this initiative is looking like. Outlook also still remains very strong in terms of where the store expansion stands. Now, in terms of numbers, revenue up 86.5%, EBITDA at that 85 crore versus that of 33 crore earlier, margins at 12.1%, and net profit at 17.2 crores versus a loss of around 2 odd crores. In terms of key operational metrics, that has also been improving. Sales per square feet has been at around 938 rupees versus that of 904 earlier. Same store sales growth, however, has softened at the 23% mark. Overall average bill value has increased to 899 versus that of 791 earlier. But despite of the aggressive store expansion that the management has been doing and has guided to do, volume growth has been at that 58% mark. So all in all, I think it'll be interesting to see as to how the next leg of growth is looking like, considering the aggressive store expansion and of course festive season spending, considering that, and plus how is volume growth and average sales price increase, all of this, how is the management balancing? So these are some of the questions that of course I would want to know from the management.
Yep, and increasing competition as well. Akash Agarwal, whole-time director at V2 Retail, joining in on the conversation now. Akash, very good morning to you. And it's been another strong quarter, as we can see. Let's look at the margin picture to start off. Obviously looking robust on a year-to-year basis. Some dip sequentially, if I just compared quarter on quarter. What is the picture looking like for you?
So if you see historically, it's a very seasonal business. Q1 and Q3 are the strong quarters for us because of winter and summer. And Q2 and Q4 are a bit slower compared to the other quarters. So that is why sequentially you see a margin dip. But the correct comparison would be year to year. And we have continued the amazing momentum over the last 8 quarters. And we've seen a tremendous response in all our newer stores. And in fact, that is why we've increased our store opening targets. So initially for the year, it was 100 stores, and we've already opened 84 stores, and we've increased the total number of new stores for this year to 130.
Q3 is also a strong quarter. So what is the outlook in terms of Q3 specifically, Akash? Do you see this kind of momentum and volume growth building up?
Yes, we're already seeing it, and especially because of early onset of winter. So winter has higher margins, higher ASPs. So it's all positive for us. And we are seeing the momentum continue in Q3 as well.
You know, like I mentioned when we started this conversation as well, you have some very large players now looking at what is your strong market, your tier 2, tier 3 cities, the likes of Trent, etc. coming in. Are you gearing up for that competition? Do you think that there is going to be some cash burn involved there?
So competition has become the new reality. So in more than 90% of our stores, we already have 3 or 4 other retailers operating in a 2-kilometer radius. So it's about focusing on your own strengths. India is a big enough market to hold at least 4 to 5 good brands in each price segment. So we are sticking to our own strengths and getting more geographical expansion and more store footprint in order to establish the brand even further.
Okay, Akash, I'm curious about the store opening plan because you ended Q2 with 259 stores, an impressive 71 stores that were opened, and that's quite the pace. I'm wondering where you will end the year at, and when do you anticipate that you will hit a mark that you're more or less comfortable with?
So the mark that we are comfortable with would be somewhere around 2,000 stores. So there's a long way to go to that mark. And we want to open at least 50 to 60% new area every year. So this year we will open 130 stores, end the year at around 310, 320 stores. And next year we would open another 150 stores on top of that. So it's a very aggressive store opening plan. And it's only because the sales, the SSSG, the new store performance, it all gives us the confidence that we've established a very, very strong brand and a very strong model, which is accepted throughout geographies and throughout all the 200 cities that we're already present in.
I love the chuckle when you give me the answer of 2,000 stores, and that's practically 10x from what you are right now. I'm wondering when you expect to hit that. You must have put that trajectory up as well. And I'm also curious about what you experience with regard to the vintage of the stores. When you set up a new store, how long does it take for you to establish the kind of sales that you see in some of your more established stores?
So the break-even point for us is 500 rupees per square feet. And our new stores from the first year or the first month itself are more than 750 rupees per square feet. So they start contributing to the EBITDA of the company from the first month itself. And it takes about 2 to 3 years, depending on the store, to mature and reach, the old stores per square feet sale levels.
Okay, and the 2,000 stores, Akash, when do you expect to hit that?
Again, that number will completely vary on the kind of performance we have. If the momentum continues and we continue giving the profitability and the SPSF and the business metric growth that we've been showing for the last 2 years, then we will keep accelerating expansion.
So by 2030?
Yes, hopefully.
Akash, curious to know about your e-commerce launch and whether this is going to be a part of the growth path going forward. What is going to be the focus rate for the next 12 to 18 months? We talked to you about the next couple of quarters, but if you increase the focus a little more with the changing landscape, how important is the e-commerce launch looking like?
See, one thing to understand is e-commerce in this price segment is not big, not even in India, not even anywhere around the world. So it's not that we want to burn money on e-commerce. We want to just have it as an additional channel using the same inventory, leveraging the same inventory we have at our stores without spending anything on customer acquisition cost and using our existing customer base and just giving them a platform to, additional channel to order V2 products at. So even when we launch it and it matures, it wouldn't be more than 5 to 7% of sales. So it's not a very significant focus for us, but we are looking for a good technology partner because the ones we were evaluating, we thought it wouldn't provide a seamless customer experience.
Then my question then is, if it's not, you don't want to burn cash because that's tricky terrain. Why are you getting into it at all? A highly competitive landscape when your current model is working well.
Because we have close to 6 crore customers and we have more than 2 crore loyal customers. So we want to give them the convenience, and there's no additional cost if you're doing omni-channel because you're using your existing infrastructure of your stores. So your stores basically act like the dark warehouses that all these quick commerce or e-commerce companies use. So if there's no additional cost and you can get a delta of 5 to 7% in sales, then it makes sense to be on that channel as well.
Okay. Akash, good morning, Neeraj here. I just have one question. When I looked at the results from Trent and the comments that they gave post the numbers, they said that in their experience, the customer has not quite come in for the low ticket discretionary items as yet, despite the GST cut, because they've locked themselves in the high price pockets or the products where the cuts were sizable and the differences were sizable. And they believed that the large portion of the customer buying will now come in Q3, Q4, Q1 next year, Q2 next year. Are you of the same belief? And therefore, the question about whether Q3, why it being seasonally good for you any which ways is there, but does the GST benefit materially come in for even your company Q3 onwards?
So see, the thing with that question is it's very hard to segregate the kind of growth that you're getting, that how much is it because of your own product, how much is it because of the GST benefit. But all I can say is we are getting better footfalls and better growth than what we anticipated in Q3. So definitely we can attribute some of that to the GST cuts that the government did, because at the end of the day, if the customer has more money that he saves, then he's going to buy another jacket or another t-shirt or another shirt. So that translates into better sales for us.
Okay, okay. Fair call, and that's candor and appreciated that. But all the best for the quarters ahead. Would be lovely to talk to you maybe towards the quarter end, Akash, about how is it that this festive quarter has shaped up. And of course, we'll talk post the numbers as well. But thank you for joining in today.
Thank you for having me.
Yeah, that's, bullish.